Strong US job data, optimism for progress in Europe, and a concern for the slowdown in the economy caused Chinese stocks to fluctuate this week. I am joined down the line by Patrick Chovanec, economics professor in Beijing, to discuss the latest data releases and the future of the Chinese economy. Mr. Chovanec, thank you for joining me. First of all, what is this slowdown in the Chinese economy due to, and how has it affected markets?
Well, a lot of people compare the slowdown that's taking place in China now to what took place in 2008. I think that there are significant differences. The slowdown in 2008 was mainly caused by external factors. The global financial crisis led to a fall off of Chinese exports. And the Chinese responded by boosting up investment to compensate. Right now what we're seeing is actually the slowdown in China is caused by a breakdown in that investment boom. That the investment boom that has been driving Chinese growth is buckling under its own weight, and a lot of the bad debt and inflationary pressure that created is dragging down growth in China. And so it's a lot harder actually to solve the problems that the Chinese economy is going through right now, because they're really internally driven.
I see. How much do you feel a slowdown in China's economy will hurt profit growth?
Well, we already see it hurting profit growth. There are every day brings a new profit warning out of China. Sometimes just a steep decline in profits, sometimes actually losses. And foreign companies in China, the latest statistics indicate that their profits are down 14% year on year. And that may not sound like much, but this is a market where people are used to double-digit growth in profits, and so that's quite a reversal.
And looking at external factors, how has support by German Chancellor Angela Merkel for the ECB's bond buying plan affected Chinese markets?
Well, certainly people in Asia and China in particular are watching the Eurozone crisis unfold, and they want to see a resolution. I mean, what the Chinese are most afraid of is another fall off in exports like what happened in 2008. Now, I don't think that that's really the cause of the Chinese slowdown, but if you did have another global recession caused by the Eurozone crisis, then it would exacerbate a lot of the problems that the Chinese are encountering right now, and it would eliminate a cushion that they have, and it would make them face a lot tougher choices. So they definitely want to see the Eurozone get its act together and move towards a resolution, and anything that moves towards that is going to be viewed as good news here.
Important Chinese data will be released on Thursday. This key data will be watched for signs of stabilisation. Inflation is forecast to drop sharply to 1.7%, well below the target of 4%. In your view, do you feel this forecast will prove to be correct?
I think we're going to see the official inflation number probably come in under 2%. But it's interesting, the PBOC, China's central bank, has made some comments about it's still concerned. It's concerned about inflation, not just because, well, first of all, because of the drought in the United States and the impact that they may have on food prices later this year, particularly on corn and soybeans to feed the large pork population here in China. But also, they're concerned about the danger of pumping more money into the Chinese economy to stimulate growth may reignite inflation. So I don't think that the central bank or the authorities here have written off concerns about inflation. And certainly the numbers for the next several months will be pored over very closely by people watching the Chinese economy to see whether the downturn that we've seen is bottoming out. I don't expect that we'll see this kind of sharp rebound driven by stimulus that a lot of people are hoping to see, but time will tell.
Finally, what do you predict for the Chinese economy for the short and the long term?
In the short term, I think that it's going to be a very bumpy road. Not only are we seeing a slowdown that's driven by a breakdown in the investment boom that's been driving Chinese growth, we also see mounting financial risks. There's been an explosion in China's shadow banking system in order to finance all the investment that's taken place over the last several years And we've already started to see some breakdowns, some localized meltdowns where this credit risk has boiled over and really resulted in some financial instability, at least on a localized basis. And so that's a real concern, and it may mean that not only do we have a hard landing in terms of growth in China, but also perhaps some financial instability as well. But over the long term, I think what you'll see is an economic adjustment away from an export and investment-driven growth model to a more domestic consumption-driven growth model. That's where everybody wants to see the Chinese economy go. But I think that there's maybe not a full appreciation of just how disruptive the process of getting there will be, and also just how different the Chinese economy will look once that transformation takes place. So a lot of people who talk about smooth landing or soft landing, I think, underestimate just how challenging an economic adjustment China's facing right now.
Thank you very much for answering my questions today, Mr. Chovanec. That's all for now, but click back to the website for more interviews and updates. Take care.